Yo, good morning, everybody. Hope you guys are having a good week so far. Had a good weekend. If y'all could just let me know in the chat if you guys could see everything okay. Of course, YouTube likes to give me these stupid alerts, like something's wrong and then stuff's not wrong. So I just want to confirm with y'all if that's possible. Good morning, DJ. But yeah, let me know if you guys can hear everything okay, see everything okay. Really appreciate that. Just make sure I got all my charts. Make sure I can log into my broker. Okay. It's been a very interesting month already, huh? Good morning, Jen. Appreciate you. Good. All right, so just to quickly jump into it, let's start with the bonds and yields. So I did talk about how this needs to hold, and if this was going to go lower, it would have to break through this inversion fair value gap. I talked about my double and triple change in state of delivery theory or protocol for validation over the weekend. So we have one change in state when it broke through that. If you don't trust it or you want to have a deeper confirmation, wait for a second change in state, especially if it's been one-sided. So we never got that. And then there's also, in this example, 3 changes in state, because the inversion fair value gap is a style of change in state of delivery. Okay, most people don't know that, but it is, right? And if you take an inversion fair value gap moment and you move up in time frame, many times you'll see that there's a bigger order block or bigger change in state of delivery taking place. So that's why I call it the double / triple change in state of delivery protocol. You don't hear anyone else talking about that on social media, right? For whatever reason, it's just here. Must know what we're talking about. But yeah, so do you guys have any questions before we get closer to the open? But I do think that as long as this thing's going to keep holding these levels, we got another change in state back to the upside here. So change in state, if we get another order block and then it breaks that again, that'll be a double change in state. It's a very strong confirmation if you want to wait for confirmation for a move that's going to start or continue in one direction or another. If you're going to see a deep retracement, say it dropped aggressively. Okay, well, if you're going to see a retracement that runs a little deeper, or if you want to confirm the retracement sincerely, you want to look for a double change in state as well. Obviously, I'm not going to get into all the details about double and triple changes in state here, but hopefully you kind of understand the concept, right? One order block is a change in state. A second one is a double change in state. Okay. So if you guys got any questions, just let me know. I'm going to actually run to the bathroom real quick. Just give me a second. I'm back, you guys. Yo, good morning, Fotis. Appreciate y'all patience. But yeah, so you guys don't have any questions? Yeah, just let me know throughout the call if you guys do. If you guys do get value from the content, don't forget to like the video, subscribe to the channel. Of course, you guys know I go live every week. There's lots to learn here. And if you have been with me for a while, we haven't had a conversation, definitely hit me up in my DMs somewhere, or you could post it in the comments if you want. You know, what you've learned, how the experience has been, what you'd like to see more of. Because again, I'm only live just to serve you guys, you know, to help you. I'm not very, I have nothing to do with ego, I could care less, right? I know what I do. I don't need validation or anything like that. But I do like to know where all of you guys are at. So yeah, if you could do that for the channel, do that, and you know, send me those things in my DM or wherever, be much appreciated. Because again, I'm always looking to serve you guys more, you know, in whatever way may arise, right? But you guys' feedback helps me with that. So, but yeah, so we'll see what happens. Again, if this thing does not break this low here, I'm not interested in seeing this go lower. There's a gap in here. So basically it's filling that in. We had buy side delivery, which lacked sell side delivery from this area to that wick essentially. So there's like a little piece in there because we got the wick right there. So buy side and sell side, but it lacked a piece of price delivery in there. So somebody didn't get allowed to get in. So they ran it up now. So now that's filled in. We have a change in state of delivery. And again, this is going to be the invalidation level. Okay. So that breaks that level there. Then we may see price overtake this. And then things may shift and we may look to reach for this or simply reach for the midpoint down here. So we'll see what happens. And again, the yields have an impact on the dollar positively in terms of correlation. The bonds have a reverse correlation to the dollar and a positive correlation with the foreign currencies and the indices. So that's why we spend time on these assets. You know, I still to this day get questions why I don't just look at the Nasdaq. And the answer to that is the markets are bigger than just the one asset you like. And if you're trading with only one thing in mind, never looking at anything else because it's too much work, then you're going to keep funding the other side of my trades and everyone else that has a depth of knowledge that understands this. Okay. So just keep that in mind. But yeah, that's why we utilize these assets. So if this is going to keep going higher unless we break this low here, actually, just meet that equilibrium. So as long as this thing stays above this and stays above this low, above this fair value gap, we basically took stops. So accumulation, manipulation, balanced price range, distribution. So if we get above this high, we would then be looking for rebalance or rebalance to then redelivery. And then we got these deeper targets up here, the wick quadrants, the 8th levels. And then of course there's a high up there as well. So we'll see what the dollar wants to do as well. And if the yields are going to do higher movement, we want to see the bonds go lower. If we want to see the indices go higher though, which at the moment is what they look like they want to do, and our target is higher indices. If that's what we want it to do, then we want to see this thing collapse, the yields. We want to see the bonds get beyond this midpoint of this accumulation range here, right? Obviously, it seems like it's going to require a reasonable amount of displacement. Of course, CPI is tomorrow, so we may have a lot of setup framework today for tomorrow. And that's just the nature of it, you know what I mean? And we have no news. One thing I do want to look at real quick. See if we have any earnings today. Remember, this website right here is called Trading Terminal. So if you want to be able to keep up to date with all these things, you can. It's a free website, Trading Terminal. Best one, from my opinion, to find the earnings or keep up with it. And earnings are important, even if you don't trade these companies or specific stocks, because the earnings and how companies do will influence, well, at least influence a little bit, what's going to happen generally in the Nasdaq or whatever index that particular big company is represented in. Okay, so today we have, I'm not really too sure what any of these companies are really. Madison Square Garden, obviously, I know. This company right here, it's a very interesting company. Long term, we're moving towards quantum compute. This is a quantum company, and they've been going viral recently. I've been seeing them in headlines, so it's ironic that they're here. But if you're a long-term trader, right, like a long-term investor, I guess, not like a day trader, but if you invest in stocks long-term and you're building a portfolio, that's definitely a company to look at. Okay. Lumentum. Interesting name. You'll be pretty impressed by that company, I feel like, because I was. In my private group, I actually have this whole process on how to break down companies and all that. So I'm not only a day trader, I am a long-term investor. So I manage a personal fund, like an ETF kind of, my own ETF. And I teach you guys how to break down companies. I have a whole template, a whole process. It's very detailed. We also use AI with that as well. So I teach you how to use that. The resource that I have with AI to get a very, very deep depth of understanding of what you're investing in if you do decide to invest. I don't encourage you to do anything I say, but if you like what you see the results and you're understanding it and it makes sense and you could see yourself using it, then of course I encourage you to check it out. But that's just another thing in my private group. But yeah, based on these earnings, I don't really see much that's too impactful. Standard Arrow is a good company too. They're gonna have to do with war fighting, manufacturing. Who else? Quantum Computing Inc. That's a good company. We're moving towards that direction. The U.S. government is investing heavily in quantum, and companies are getting worried. Oklo. I've been talking about Oklo a lot. That's a nuclear reactor company. They make custom nuclear reactors and miniature nuclear reactors, portable. And the company is just a really, really good company. The CEO is a savage, real savage, like in terms of what he does, not flamboyant like an Elon Musk, but when it comes to what he does, he is an absolutely spectacular individual. He wants to do well for the company. That's what you want. But it may take a little bit of time because, nuclear is just getting the leash taken off of them so they can do what they got to do. But yeah. What's your take on pre-market trading and how can you set yourself up to be successful trading at that time window? So when you're trading pre-market open, you want to make sure, let's get away from this. So when you're trading pre-market open, like if you start, I know you're in California, Jen, but if you start from 4 a.m., anyone on the East Coast, it's, what is it, 7 a.m.? 7 a.m.? Yeah, 4 a.m. Pacific Standard Time. For those of you in the Eastern realm of things, it's 7 a.m. Pacific, or 7 a.m. Eastern Time to about 9 Eastern or 6 a.m. Pacific Standard Time. That liquidity and what happened in London, those are the pools of liquidity that you're going to want to go off of, right? And that 2-hour window can also be used in the AM session for projections. Same thing with the regular trading hours gap. So in terms of where price can go, obviously you want to keep those things in mind. But the liquidity, right? You want to think power 3 as well, right? Because every hour has power 3. So you think about the narrative on the higher time frame. You think about some of this liquidity that I've just mentioned, and then you just try to frame yourself around those areas, right? To those areas, 15-minute highs and lows are important too. Like if you're targeting an hourly high and low, the last 3 hours, given the hour that you're looking at, these are liquidity pools that you want to utilize to target. And obviously they're a little short term, and they'll probably work. Well, they most of the time work inside the larger narrative. So these are just some foundational things that you want to understand about how to target liquidity, how you want to view things when you're a pre-market trader or any other type of trader, right? It's universal. But in particular, that little time window, the 4 a.m. to 6 a.m. Pacific Standard Time, it's very important. And then what happened in London, you want to take those highs and lows and work out the range that you're trading within when it comes to that. And then, of course, you just use your model. You use macros because those are relevant as well. You think of, like I said, power 3 from an hourly perspective. From 3 a.m. Pacific Standard Time, is it 3 a.m.? Yeah, 3 a.m. Pacific Standard Time is when a 4-hour candle's formed. So when you're looking at that delivery up to the time when you're trading in pre-market open, you want to think of power 3. Where are we at in terms of that 4-hour power 3 that we're currently working in? And again, what's available from London, right? We have this high. It took that high from London, from pre-London. So that liquidity has been engaged. We have the lows here. Higher time frame wise, we're looking for these equal highs. So it's going to be best to try to trade in that direction. When you're trading pre-market open, though, you got to also keep in mind that we're trading inside the daily range, right? The manipulation phase for the most part, unless London, looks like it's ready to go, right? And it's starting the move for New York, because then New York will be continuation if you have a logical level to target. So, the reason I'm mentioning these things is because, again, you want to know how to frame the battlefield, right? And it's true for any moment that you're looking to trade, right? Any session, any moment in time. And some of the best ways to do that is obviously to have the approach that I just mentioned. But then also, again, think of power 3, because once you can determine power 3, like I've been teaching you guys, pretty detailed here on YouTube, but those of you in my private group, we've been getting real deep with market maker models on a lower time frame, because you also use that as well, depending on what you see in price. And then power 3, once you can determine where you're at, you can determine what is the most likely mode of operation you should take moving forward, and then what targets you should aim at. But you want to keep things very nimble as well. You don't want to aim for hundreds of handles. Again, we're in the setup stage generally of what that New York session is going to do. And because these are indices and they're a US asset, the US time window is going to be the best time to trade. But if you can't, because maybe you're busy, maybe you can only be on for pre-market, this is how you frame the battlefield in terms of liquidity. And then, of course, my liquidity mapping list, if you could find something that's relevant on that list of liquidity to also use, like I just mentioned, session liquidity, the last 3 hours liquidity, 4-hour power 3, and the structure, mentioned with that. And then, of course, market maker models, your model for entry using macros. These are all things that you'll use to be able to navigate the pre-market session. It's a little bit tricky because, like I said, we're in the pre-market open phase. So the biggest part of the move is going to probably take place most of the time during the New York Open, or not the Open, but the session, right? The New York AM going into PM session as well. That's where the main volume is. And a lot of times when you're trading pre-market, the reason that hourly highs and lows and hourly power 3 is going to be your best friend is because look what happens. We could be stuck in this range, right? It could stay in this range until later. The open may come and then we may drop down below this, sweep that liquidity, and then look to go, or vice versa, right? If we're bearish, you may look to hold pre-market, The 630 comes out, especially when there's no news, manipulate, take liquidity that it wants to aim at, and then immediately break down and then start to use the change of state of delivery logic we talk about, inversions and whatnot. But that's going to be one of the risks, right? You may get caught in the, I guess, development stage of what's going to happen in the New York session. But that doesn't mean that you can't take trades if you have the perspective that I just shared with you. For those of you that do want to trade the pre-market open, I've just laid out how you frame out the battlefield. And of course, you got to stick to the higher time frame narrative as much as you can. Pre-market has a very common characteristic of going against what that higher time frame is. So you may want to consider counter trend perspectives. So there's a reasonable amount of stuff that goes into pre-market open to be able to trade it effectively, just like with Asia, how it's hard to trade Asia in many cases, especially with an asset that's not part of that time window, right? It's a US asset, right? It's not Asia. So New York is always going to be the best. But again, that's not to say that there's no opportunity in the pre-market. But if you can take what I just mentioned, use macros, only trade during a macro, even when you're in pre-market open. And then just simply frame out these liquidity pools and see what kind of scalps you can get. Like it looked on the, what was it, the 1 hour chart I just looked at? Wait, was it the 15 minute? Yeah, it was 15. So from this 15-minute chart, we have liquidity here, liquidity here, liquidity here, and then liquidity here. We also have highs here, right? That's the 5 a.m. high. We got the 5 a.m. low right there. So we're inside that little range. So that liquidity, if I was to go to the 1 minute or 15-second chart, right? That is right there and there. What do you see in terms of power 3, right? Price is now displacing. So does it make sense for them to come and also look to take this low? I think so. We got buy side here, sell side. So you could also think of power 3, right? From 6 a.m. Also market maker sell model. We broke down below this. It should respect that if it was to break through that like it did. And we have these equal lows as a very clean, easy, low-hanging fruit target. That's the key though. You want low-hanging fruit, very small, sometimes big, but a lot of times small moves to try to be a part of. And again, you also want to consider the daily open. Where are we at in the daily range? What has transpired, right? Or do we see a lot of speed and movement happening in the pre-market session from London session as well? Then we may have a pretty spicy pre-market delivery. So you may be able to see bigger moves. But when you have that, of course, going into New York, we got to be careful because that could slow down New York at the beginning in that first 30 minutes for those that do trade the New York session. But hopefully this perspective on how to map the battlefield, how to think about the pre-market open is helpful. And again, it's all the same. Every hour, every time you look at a chart, we're in a market maker model or a power 3 or both, right? It's many times both are working together. And on the hourly perspective, you could frame out an hourly range and then just simply use liquidity in there from the lens of power 3 and market maker models. And a whole new world will open up for you, But again, you got to consider where we're at in the daily range and just the realities of it. Trading pre-market has opportunity if you know how to navigate it and can break down the battlefield like I just discussed. Right? Like for instance, I think that we should be able to, target those lows. Like I said, got there quicker than I could put the freaking thing. But that's a move right there. That's a trade, right? Depending on what your model is, buy side, sell side, market maker sell model, this low to that high, this is inside of it, but this low to that high is also a market maker sell model. What do we see in that? Coupled with these equal lows, we have accumulation here. Right? Accumulation, smart money reversal. First stage distribution was pretty lagged. Broke down one more time, left equal lows, but then it returned into it. And what did it do? Respected that accumulation level and took off, broke down through those lows. So you can kind of see how you could consider framing setups Maybe this goes more than 20 to 30 points, but again, your expectation has to be, let me get what I can get in pre-market. Okay, and sometimes you'll catch the tiger by the tail, right? But you know, it's been kind of slow. It's pre-market, there's no news, so you know, when there's news at 5:30 a.m. Pacific Standard Time, that's really good to trade pre-market open because you'll get some type of flurry of volatility. But again, you're ahead of the big part of the move almost every single time, right? When you're trading indices. So now if you're trading GBP and the euro, could be a little bit different story because they're London assets, right? European assets. Okay. So was that helpful, Jen? Just let me know. Hopefully that was helpful. Good morning, Fancy, Emmanuel. What's up? What's up? What's up? Yeah, that's my approach and perspective on the pre-market open. And again, if you were to take the 6 from 4 from 4 to 6, get that range. Try to get some projections going. Get a little bit of projections going. Puts us right above that high, 1.5 standard deviations. So we'll see what happens. If you don't like this way of doing it, you can also use this projection tactic. Go from that low to that high and project it up. And then aim for, aim for 2.5 standard deviations. So we got somewhat of a confluence. I wouldn't say it's a confluence. They're not really too aligned. I guess it kind of is in the middle of this little string of projections, I guess. That little range in there, it's right above that high. So regardless of which projection you're using, we still see that there's some likelihood of it getting up there if we remain bullish. I believe we're going to be bullish. So just to get that out the way, I'm bullish on the indices unless we invert this fair value gap. If we invert this fair value gap, how do we know it's inverted? By closing below. If we do that and we don't show any respect to this, I'm banking on this being a change in state of delivery, order block, bullish breaker, large wick with displacement. That's a BPR. So this high to that low, moving forward, should act as a balanced price range if we're going to go higher. We see this low here, this low here, this low here. That is a fractal low. And then once price can close above this, right, we should be able to get a pretty large acceleration. This was a large wick that went up and we closed off of it. So that tells us that it's not ready yet to continue to go. Once we get displacement that closes above this midpoint of this wick, it becomes a little bit more likely in terms of time element delivery and price, right? Because it'll be shown that it respects that. Once we get up above this high too, when it closes above it, we got a balanced price range. Something else that we got, if we can get up there again, is a mitigation block here. What does that look like? Well, low, high, failure swing, break above this high. So you can also look at that as a type 2 dealing range once we get above this high. So these are things that I see that is allowing me to be confident unless this level gets violated. Right, like I said, this allows me to be confident in us going higher. Okay. So again, if you guys have any questions, just let me know. But I'm pretty confident that we're going to end up getting this. So we'll see what the dollar does. The dollar has this displacement. It's consolidated. Okay. We're definitely observing how this is going to be treated, because this is a potential accumulation to distribution for a market maker sell model. It's anchored from the quarterly and monthly bearish breaker. We got a change in state of delivery here. Remember what I just talked about in terms of the double change in state. If we can get a retracement that preferably can't even get outside of this candle's range, but if it does, if it just wicks up there and then breaks down again after leaving a bearish order block here, that'll be my double change in state of delivery idea. And that would make me very, very confident that these lows will be taken. This low will probably be taken. This range will stop acting as a BPR. Because if this is bullish, this is going to stop right here. It's not going to even reach to the midpoint because it just doesn't do that. And if it does, and then still goes higher, it needs to be a wick. If we just start getting closures below the midpoint, again, that's confirming this as a market maker sell model. We're already very close to this low, to that high, up to the midpoint. So we're already very close to that, if not already below it. Yeah, we're already below it. So if that happens, and then we also get below this, and it closes below that range equilibrium, it's very likely that these equal lows here are going to be very high probability to be targeted. Otherwise, if we invert this fair value gap, that's what puts me in position to then re-examine, reconsider this upper monthly fair value gap the price clearly rejected and couldn't get up to. Right? So yeah. So these are just some of my opinions. What I believe the dollar is going to do, the indices. If the dollar goes to the downside, then obviously it's going to have a bullish effect on these assets. I think that that is what's going to be the case. I think that we should still get this up here, as I've been talking about. We still have this piece of that little liquidity void in there that we targeted and outlined for a while. Before it even manifested, I talked about that being a likely potential issue if this was going to keep going lower. It may have to come up there first at some point, and then if it wants to go lower, so it balances the price range. That's imbalanced. When we have buy side and sell side that completes the whole range and delivers through it, we want to see not many pockets of liquidity left, not many inefficient pieces of price delivery. But if you have like a up fair value gap and then a down fair value gap that overlaps, that's balanced, right? It's a balanced price range when it gets through it, especially if it closes below the one on the left. And you can kind of see it treated as such, but again, we could visually see that it wasn't fully balanced. So they just pulled people down, stopped a little bit, and then rejected, created a buy model like we talked about, and then now we got up into this level. Order block respected, order block respected. You see how things changed? It went from bearish PD arrays to then bullish PD arrays being respected. So you want to keep these things in mind and observe these things. But we got up there, got this fair value gap. Let me actually... Is that a gap in there? Yeah, it is. So yeah, we definitely got to watch this. So yeah, that's my opinion on the currencies. We'll see if anything changes. We shall see, won't we? But I can see, well, I really don't like the fact that it traded so deeply into this range. We do have failure swings here, failure swing equal lows. So if the dollar was to hold in this fair value gap here and start to break, I mean, we closed that whole entire thing in. So this is balanced. So whichever way it decides to break out from, like if we start to break down, that'll be a market maker sell model, or at least I'll look at it as such. And everything on the left side should invert. as we look to target these relative equal lows. But if this thing comes down and can't get back below the midpoint and we displace higher, we have equal highs. So we got equal highs and lows for the dollar on these lower time frames. Equal lows, relative equal highs, failure swing. So again, that fair value gap is definitely something I'm going to keep my eyes on all morning. And just see how it's going to be respected or not. That's going to be very helpful. So yeah, we'll see what happens. Gun to my head, I would like to see the dollar go lower. Right? We're in a potential sell model. We've had a lot of respect up here. Got an inversion fair value gap right there that we've definitely closed below and worked the low portion of. Failed to break above the midpoint. So, you know, it has been pretty aggressive lower. It wouldn't be a shocker, though, if they were to send it up to take these highs out, but still remain in the lower part of this wick. You know, that's permissible to sweep liquidity and then position counterparty to go lower. Right? Because that's what, you know, the manipulation does. They pull in people the other way. And, you know, we know levels that help validate whether it's fake or not. You know, once they scoop up enough and hit a level they like, then price ends up going lower in this case, right? So we'll see. This fair value gap, like I said, is going to be important in us determining, you know, what it's going to do. Is this going to stay in this and break down, get below that midpoint, and then target these equal lows? That's what I'd like to see. Or is it going to just try to come and take this out? Or is it going to be range bound up until tomorrow? Because that's a possibility too. And just bang around, taking out hourly highs and lows in a consolidation. So that's a risk with what we got to deal with today. So we're going to keep that in mind. Okay. So I do, again, what the hell? I do want to see if we can get price to come up there. Okay, we do got wicks in here. Let's try to move up a little bit, see other levels we can identify. I like the 16-hour fair value gap. It's also a 2-day bullish order block. Go to the 2-day, you can see it very clearly that we're in an order block. The price is above. So we wouldn't want to see price get below this midpoint of that order block. We've already respected the accumulation turned distribution like I outlined. Everything's been outlined before the fact. It's not just discovering it today, right? We've been on this thing like white on rice. So we'll see if it can just continue with that sentiment. It is trading into this consolidation. It is day before CPI. So again, it's a no news day as well. So you got to have very controlled expectations. And people don't like to hear that, but I'm not here to tell you what you want to hear, right? I'm here to teach you how to be effective. And me telling you everything you want to hear all the time, like most of these people do on the internet to get attention. Obviously, they get really horrible results with their students. So I'm not here to do that. I don't want you to waste your time doing dumb things or having an improper mindset. So if that's my goal, I can't tell you things you want to hear all the time. Right? So hopefully you guys can appreciate that. I know some people don't want that, right? They're here to be entertained. It's entertaining when we call the market and say it's going to go somewhere and it goes there every day, literally. So, and then if we don't know, we're able to get in line with it. So I think that's pretty entertaining if you ask me. But we're still in this range, so I'm not going to be too demanding here. We did hit 630. So let's see what this thing wants to do, right? I did mention that there is a chance for it to want to break through that, come down into this, wipe this, and then go. So we'll see if it wants to do that. We do have relative equal lows down here if we invert this gap here. Again, that's going to be something that piques my interest to see how deep we can actually go. But we're going to just be waiting, right? We have breakdown below that. So it's a change in state of delivery. So we'll see what happens in the near term here, trading into that bullish order block we talked about. Let me actually clean that up. 15-minute, 1 hour. So yeah, there's that 1 hour order block. Okay, now we're breaking through. I like that fair value gap there. So now we're really accelerating, trying to reach for these equal lows probably. Wouldn't be unreasonable. But you look at the week. Look at what the week has done so far. It hasn't really done anything, right? We just kept going back. We keep going back to the weekly open price, back into that new week opening gap. So we'll see how this candle closes. We have 30 minutes for this hourly candle to close, so it's going to take a while. And of course, we have this one as well. Let's go look at the other indices. Oh no. Looking for SMT. I think the Dow, yeah, the Dow has SMT. So the S&P and the Nasdaq have failure swings. So they're the weaker of the three. So the most pronounced sell-offs, if it does drop, it's going to be on the Nasdaq and the S&P. Look at the Nasdaq breaking through aggressively. So again, these lows here are definitely a candidate. Again, this is still trading inside that 16-hour fair value gap that I talked about. We've been using this thing for 2 days. It's been resting inside of the upper part for 2 days. It's refused to get down below the low or the midpoint and close. So I do like these equal lows here. So we'll see what that wants to do with that. We've got inversion in here. Kind of refine that 1 hour one down to this. I'm gonna keep the 1 hour upper part, the 1 hour fair value gap upper part right there. So yeah, what do you see in here? Well, it could be a market maker sell model. If it's going to go lower, this candle right here should hold price. And you revisit back into that, we should be able to hold if it is going to go lower. So that should offer something to target this and this from the lens of a market maker sell model. Whoa, something's happening. Oh. Why do I have a alert there? It's interesting. Good morning, Z. Just saw your comment. So yeah, right at the gate, price has pretty much dumped off. The dollar is very lethargic still. So again, I think it's best for us to just let this first 30 minutes go, right? Let it show us what it wants to really do. We gave it a chance to hold in this and then try to attempt the highs. With this behavior, I'm not really too confident that they're going to try to send it up there today. It makes me feel like they're trying to hold price. So they may pull people in. Everybody and their mama sees these equal highs up here, as obvious as they are. There's like 5 highs up there. So that completes the market maker buy model, part of the bigger one, right? But that's a buy model in itself, aside from the big one. So these lows down here are getting targeted. So like I said, with this, if it's going to go lower, that would offer an opportunity to target the lows, or it should, right? And depending on your rules, what your model is, there was either an opportunity there for you or to trade or just to study. And hopefully you guys see, the logic as far as why that would make sense. And what is the core of it? It's the market maker buy and sell model. It created a sell model framework, buy side to sell side. I identified the equal lows, right? Once we looked at it, zoomed out a little bit, we saw those equal lows. So it's very likely that they're trying to target that once we did this displacement here. Something that you got to consider though also is that this upper part of this regular trading hours gap that was created, that's now inefficient. This mitigation block held for a second from earlier, but has now failed. These equal lows and these equal lows. So we got buy side, sell side. We got a completed sell model. So we don't want to see any retracement that does take place. If it is going to be bearish, we would not want to see this 25% get traded through. If it does do that and say it ends up getting above the 50%, then that puts us right back in line with now a buy model and bullishness. Right? Narrative wise, it's still bullish, but we'll see if today, you know, they want to try to pull against them to just simply set up further sentiment and liquidity for tomorrow. You know, does it mean there's no opportunity? Of course not. You could have taken this trade. I'm personally waiting for that first 30 minutes. You know, let that unfold, get us into a macro, put us in a better position. And then see what we can get offered, right? But this right here is definitely something that worked out the way we thought it would. So there's one good setup given today, depending on your rules, right? It really just depends on what you're comfortable with. If you don't trade market maker models, then there's no opportunity for you. But I encourage all of you who, you know, have been here for a while or are brand new and like what I do, or the stuff just makes sense. You need to study market maker buy and sell models and Power 3. And you may know the basic concept and whatever, right? But you don't know enough if you can't get in there and identify them, because they're frameworks, they're entry models. Like this is an example of using the market maker model second stage distribution delivery as an entry tactic. Okay. It went lower. I would have much rather preferred that it shot a wick into that. It'd be a little bit aggressive with no revisit into it, just straight out the gate, just flames going down, right? But nonetheless, market maker buy and sell models is a framework plus an entry framework. As long as you understand the phases, you can be a part of it, either in the first stage or the second stage. Second stage is the silver bullet, if you will, when it comes to the market maker models. It's the easiest thing, the most dynamic thing, the most confirmed thing if you're, you know, analyzing things properly. But that's the silver bullet in the market maker model. That's why ICT says that if he could pick one thing to trade out of everything he's taught publicly, it'd be the market maker models. They're very dynamic. There's a lot that you can do with them. Look at this order block here. Should be able to get this thing to go lower into that. Remember what I said about the market maker model being completed? We need to stay in that lower 25%, preferably in the lower octant, right? Lower half of the lower 25%. And then you can also break it down even further with halves. That's a 16th. And look at that precision right there. Justified with this being a completed market maker sell model with relative equal lows that are now present. And then market maker models being a balanced price range when they get completed. Because every PD array is a balanced price range. Power 3, when it's delivering and it gets past the accumulation manipulation phase and then we're in rebalance, that rebalance should be trusted because what happened previously in the Power 3 is a balanced price range. You know, what I'm saying here is most likely going to go over many people's heads, right? But that's because we haven't studied the concept enough. Power 3 and market maker models are very, very deep. It's not just accumulation, manipulation, distribution, or phases in a market maker model or Power 3, right? There's so much more to it. The fractal nature, you know, each turning point's role, how to use it as validation, how to use it for bias and narrative confirmation, how to use it for entry tactics, right? It's very deep. So, you know, if you haven't taken these two things extremely deadly serious and obsessively studied as much as you can, I encourage you to take this as a reminder to do so. Because I'm telling you, anything that I'm trading, if there's no available market maker buy and sell model or power 3 perspective that I can map out in phases, and if I don't know what phase we're in, I'm not going to take a trade. That's how serious it is, right? And when I'm looking at bias and narrative, I'm thinking about that too on the higher time frame. Where are we in terms of the higher time frame, power 3 or market maker buy or sell model? Because once you determine that, you can determine what to do, because each phase has a characteristic. Okay. So as we could see, price came down, took the low, wicked up into it a little bit, started attempting one more time, but now created a rejection block. Rejection block, wick down into it. Rejection block after a stop hunt. So now we got this order block here, this down delivery after a stop run with a rejection block holding. So if this thing was to break aggressively through, then we would have to start to consider, okay, well, this was probably just a stop run. Maybe they'll leave that available. Because there's equal lows here that are so obvious, I would really require personally to have a little bit more information, send price up a little further, get us beyond this midpoint, and then I'll catch second stage distribution bullish if we can get it up above this candle here. And we have, let me see. Okay, let me see. So we've got accumulation. Let's see. Pull up the boxes so you could see it. I normally have just outlines, but let me just visually give you this real quick. So we got accumulation. If it's going to go higher, this may very well be manipulation. We're inside that 16-hour for value gap inversion right there, closed outside of it. We're in the upper part of it still. So if this thing was to break beyond that midpoint of this range here, of this market maker sell model, again, that would put me in position to start really wanting to take a buy. For now, though, this retracement, we still have those equal lows. So I think it's more likely that this retracement is going to lead to these getting swept. And then once we tag that, we'll see what price wants to do. We do have an extension down here. If we take the whole entire range here from, you know, that low to that high, got a little bit of a standard deviation, half standard deviation projection. So that gets us right below that low. You can also use this high to that low. Get a 2.5 standard deviation as well. That high to that low. Or you can actually use that high to that low. It's pretty much the same. So it puts you right below that low. So what I'm watching here is this rejection block. Are we going to respect that? For now, I think it's going to target these lows. So I want to see if it can fail. And once it fails, that inverts its role. So it's an inverted rejection block. So that level should be sensitive, along with this being a bearish order block in itself, change in state of delivery, respect to the lower 25%, almost exactly, of this market maker sell model. I know it looks a little bit busy in here, but just bear with me. Hopefully you guys can visually see what we're talking about, why we're thinking what we're thinking in here. You see how we came back to that accumulation, that turned distribution? We're staying below that. Is that screaming to us it's going to be bullish? No, right? It's telling us bearishness is more likely for the moment. And now we're going into a macro. So Again, my opinion hasn't changed as far as what I believe price is going to do in this instance. We've been calling for those lows and now hit those lows. So the whole entire objective, once we traded through the midpoint of this low here to the high, triggering the market maker sell model to then target these lows, came to fruition. So everything that we just outlined, again, came to fruition. I just been waiting personally to be able to take an opportunity after the first 30 minutes. Rules hurt sometimes. You'll miss moves, and it's okay. You know, I could have taken this trade, right? I could have decided to take it. But I'm more curious as far as how this bigger range, how this big target is going to be utilized. So I want to catch a move that gets up into that. But there's really no real issue with taking the short in there. Again, we outlined it all the way down, gave you the why, more context, explained my thought process, market maker model, power 3, talked about both those concepts too. So hopefully this reinforces things for you. Makes you understand why taking a short in there could have been reasonable. And when we decided that these lows are now going to be targeted, it was once this midpoint got traded through. So like I said, this rejection block has now changed its overall nature. We'll kind of just disregard the fact that it was a potential rejection block for a second, but now it got inverted. But now we have a bearish order block. So how far could we go, right? We still have this projection high to low, 2.5 standard deviation. When we hit this projection, a lot of times it can give a retracement. So because we're below this low here, I'm not wanting to see this get below the 16-hour fair value gap. This is also, again, the 2-day bullish order block. So I really don't want to see, if I'm going to remain bullish, I really don't want to see this midpoint get completely blown through, which we've basically met it at this point. So we got buy model here also. I didn't point that out earlier, but that's a buy model. You could look at the left side, drag it over to the right side. It set up a buy. So in pre-market open, a little bit after London kill zone, the kill zone and the sessions are different, by the way, for those that don't know. The sessions themselves are the sessions, right? They're a little bit longer, but the kill zones are moments in those sessions that are effective, that can offer moves, right? Volatility. And then you got macros to narrow it down even further, which we're about to hit the 650 time right now. So we'll see what it's going to do. Is it going to pick up? Or are we going to reverse at some point? For now, I want to wait and see how this liquidity is going to be treated, because we've now did a very significant run below. Higher time frame is still bullish. We're still in a buy model. We still have equal highs up here. Dollar, what's dollar doing? Dollar's declining. That's good if we're going to be bearish or bullish for the indices. What do you see in this price action too from this 3-minute chart? I very clearly see if we are going to go higher, we have a bullish breaker forming after liquidity is taken, still inside of a higher time frame level, and we hit a 2.5 standard deviation projection. So that's generally a time when a retracement will happen if it's going to continue. May hang around in there, accumulate, then continue. Or we're going to see this thing break above this high. And if it does that, I am very interested in trying to take a buy up to these highs up here. And again, that doesn't mean that the shorts, although I'm focused more so in that direction, that doesn't mean that all the stuff that we narrated and outlined before the fact in real time for the short wasn't an opportunity. I just have rules. That's all. Just like how you should. And that's going to mean you're not going to take every trade. But maybe you would have been comfortable with this, right? And didn't really concern yourself with waiting for that first 30 minutes. The opportunity was there. You know, maybe you would have wanted to take it. There's nothing wrong with that. You got to have this independent mindset. I'm just sharing what I know, what I see in price, how I'm doing things. We clearly frame out many perspectives. I use many different PD arrays, many different models. I have 6 in total. But you really only need one. It's best to have only one. And for me, I love the breaker. I'm waiting for the breaker to set up in some way. I'm sure that if I went to the 1-minute chart, there's a breaker right here, right, that could offer a short. This thing would have returned into this. That would have been a breaker. Zoom out a little bit. We have a high, low, failure swing, breakdown. So that's a mitigation block. We have high, low, failure swing, breakdown below it. It's a mitigation block. It just never really offered a wick or anything. So although the pieces are there, using those models wouldn't have offered anything, at least in this time. But now, like I said, I'm waiting to see how this is going to be treated. We have a low, high, lower, low. It's a breaker. So if it's going to go lower, it's going to go lower from here. It's not going to really try to come all the way back in because, again, it's a breaker. If you look at the next layer, it's a balanced price range with the market maker sell model. Okay, up to that low. And like I said, a breaker, low, high, lower, low. This down wick, we wouldn't have to see it come all the way up into that. I wouldn't even really want to see this fair value gap get traded to in any real serious capacity. Because if it does, it starts to add risk, starts to add the potential likelihood that it's going to fail. Right? So we want very quick responses from our PD arrays, but that's why you want to use the timing element in the macros to allow yourself to get in front of the right moves at the right time with your PD array of choice. So yeah, we're inside this lower part. So again, this is an order block, but that order block on that upper time frame is a breaker on this lower time frame. Nothing has changed. It hasn't told us it's going to go higher yet. I'm not willing to pick a low. I'm watching this fair value gap. If it inverts it, then, of course, it may start an early sign to the breaker. You guys know, I have my private group that inversion fair value gaps form also inside of breakers. So you got the low, right? If you're ballsy, think like, yeah, well, there's SMT. There's a reason to go higher. Maybe we're in the macro, right? And it makes sense for you to engage that because the higher time frame narrative says it's okay, right? That's one. We have a second potential opportunity if we invert that, right? So that's 2. 3 is going to be the high, low, higher, high, traditional classic breaker. And then the 4th scenario, when it breaks this, offers the breaker. The 4th scenario is this. Okay, right after the redistribution, because think about it, we have accumulation, manipulation, distribution, rebalance, redelivery. After that rebalance, redelivery, that sets up the breaker that confirms the 3rd opportunity presented in a breaker. That next rebalance, you can use this previous rebalance as a balanced price range, anchored with the breaker at the core, right? At the start of the move. And hopefully you have context at the low as far as why it would run higher. And then you can participate in that way. So that's why I love the breaker. It gives you 4 opportunities. 4. Most people don't know that, right? They just know this one. When in reality, it's a whole system. Think about this too. Price went lower to go higher. This larger breaker delivery, if we go low enough in time frame, right, it's actually potentially setting up a market maker buy model. Again, assuming that it delivers. I'm not assuming that right now. This thing could still look to go a little bit lower. I'd prefer that it doesn't if we're going to look to buy. But what is price telling us right now? Shorts. That's all it's telling us. So if we're going to take a trade, it has to be short. Or wait, like I am. I'm waiting. I want to wait and see, what it's going to do. Because I want that bigger, meatier move. But that's a real nice displacement. Again, something that has me, little hesitant to want to take a short is the fact that, again, we're inside of a larger PD array. Things haven't been fully confirmed that the buys are not going to take place. We also got, look at the Kraken correlation. It's another reason why I'm not taking a trade right now. I'm just letting price come to me. Again, could we have taken the trade? Sure. Could I have engaged? Yeah, I outlined it. Literally told you before the fact. But just because you can outline a trade doesn't mean you should take it. You have to have rules. You want to have a career that's repetitive, that you can repeat, not just get lucky sometimes, right? And emotionally swing all the time. Like, we don't want to do that. All right, do you guys notice what's in this level right here? It's a rejection block. Respected here, respected here. Now it looks like it's still somewhat respecting here. We have inversion here. We have 3 minutes until it closes. Same thing with the hourly. So if this closes below this inversion fair value gap, that's screaming to you that we're probably going to look to take this out. My eyes getting blurry again. I don't know what the hell's happening. Probably gotta go to the doctor about this stuff. My right eye. I don't know why it's been doing this. Oh, man. Yeah, it's weird. It's like sore. My eyes like sore. I didn't do anything. I'm just on the screens too much. just obsessed. That's why I wear glasses, though. They're not like magnifying glasses, but you know, it's Blu-ray helps a little bit, but you know, you want to get really good ones. You don't want to get like the cheap ones that have like 5 in a pack. Get 1 or 2 that, you know, are at least $50. At least, you know, get out of the lower round, because this will help a little bit more. It's not going to help entirely, but yeah. Hopefully this, my eye can clear up. It's like, ugh, a little bit blurry. But yeah, so I'm watching this. Like I said, I would really like to see that inversion here act as an inversion. If it does, that'd be nice. But for now, we got 1, 2, 3 drives. If we were to break down below this low here, that's a bearish breaker, and that would be something I'd be potentially interested in. And just simply look to target some of that down there. But we have a low, high, failure swing, order block, order block. So yeah, it looks like it's now starting to show slow signs that we're now going to try to get up beyond this. So let's see what happens with dollar going lower. The influence of the Dow and the S&P. You know, if they continue to push higher and the dollar goes lower, again, you see the reason why I waited. My intuition kept me off a trade. And look what's happening. I'm just reinforcing the validity of how I'm teaching you. You know, there's no better way to learn than this. And to be able to sit with someone that can outline it live every single day, which we do every day. I have some private students on the call right now. Don't we do this every day? I've asked y'all that before publicly, but it's shocking. It really is. It's mind-boggling to me. So I know it's mind-boggling to others that see it. But it's every day. It's literally every single day. And if we get above this high, it's not only a breaker, but I would potentially classify that as a distribution level. So accumulation to distribution, market maker buy model. Oh, some news. U.S. home sales fall. Existing home sales. Okay, a little bit more. A little bit more than expected. So this whole regular trading hours gap above, we now have obviously the respect to that little market maker buy model, second stage distribution here, little baby one inside of the breaker. So this upper part is the larger breaker, like I said. So that's what I was wanting to wait for right there. So we got that as a bullish breaker here. Whoops. So yeah, I think that all of this was fake just to pull people in. We got that inversion in there, like I said. So that offered an opportunity. Remember, the low, the inversion, now we're at the third opportunity in the breaker. I don't think anyone has really went publicly like this and walked through a breaker like this. Did you know that there's depth like this in a breaker? Does anyone even talk about it? I don't see anybody doing it. And then it works out, does what we say it's going to do, or what it could do. It's interesting, right? So now that we're above this, let's actually pull that up right there. So again, we had a breaker on the upper time frame, or it's not really an upper time frame, but breaker on the 3-minute. Went down to the seconds chart. We see that it's a market maker buy model. Right, you see a market maker sell model here when it retraced to go lower, targeting the lows. And now we're inside of the 7 a.m. time. I like these equal highs up here. You see that? That's beautiful. I'm very curious if we can get up there. You know, we run the risk of this thing being very, very, very range bound because we got CPI tomorrow. So it's a risk you're going to have to accept. But I'm watching this area in there. I don't want to see it aggressively break to the downside. I would not want to see that. Again, the risk of this thing being range bound is very, very great. But we took sell side in here, so counterparty for a buy position has been engaged. So we'll see what it wants to do. We have no news. We're still in a macro. So we'll see if this thing wants to try to get up into this. Again, because this is a market maker sell model that got completed, you know, it may cause a little bit of friction, a little bit of reluctance. But we'll see what it wants to do. See if it can't get some type of acceleration, you know, back inside this stuff. We took stops there. We kind of got seek and destroy happening. So, you know, it's definitely something that is a concern. Overall, it's a seek and destroy. But we do have market maker buy model in here. So I'm very curious to see if we can get that to accelerate. We also got midpoint of the regular trading hours gap. So if this was to break through the midpoint from this low to that high, if it was to get down into here, it may look to go lower once more and then set up a sell model. So like I say all the time, we're in a market maker model all the time, right? If this goes lower, we have accumulation, manipulation, distribution below that low, it rebalance and then redeliver down to the midpoint if it was going to look to do a further downside delivery. Again, you could see how on this 1 hour chart, we're in very unreasonable territory in here, right? It's at an area and price that's not ideal. Does it mean it won't offer an opportunity? You know, we'll have to wait and see, but this is how you know we're in an unreasonable area. We're right in the center of the range. So we're at equilibrium. a little bit above it. But again, when your model's there, you got to take the trade, and that's enough for me. That's enough for me right there. That's enough for me. I'll probably stay here and think, damn, I should have held it. I don't really give a shit. 30 points on a day like this ahead of CPI. That's all I aim for. I just aim for bread and butter, easy. I literally waited and showed this trade. I talked about the early aggressive trade. I talked about the different phases of the breaker. I talked about the fractal nature of market maker buy and sell models, power of three. Talked about how this was a market maker model. Talked about how this was also accumulation, manipulation, distribution. Talked about the 4 different entries. So, you know, we got this delivery in there. Let me pull up this for completeness sake. Just to show y'all, AMP, okay? People like to see this stuff. Just like I mentioned, okay? So yeah, about 30 points. Could have held it longer, but again, it is what it is, right? 20 to 30 points can pay your bills. I don't use one contract, okay? Just it is what it is. There's nothing wrong with one contract, you know, even if, you know, you're just able to use that because your leverage allows for it, or your psyche only allows one contract because it can be a little bit hectic. There's nothing wrong with it. I see the market maker model. I think that it should, if everything stays in alignment. I just look at this nasty delivery. It's all over. And where we're at, I mean, it's highly risky. So would you really not allow 20 to 30 points to be secured when the uncertainty is really, really high a day before a news event, right? The likelihood of you making a mistake early on in your trading, even within a year or two, is greatly increased around times like this. But luckily, you know, you guys have a community like this, someone that can actually come out here and show you what the risks are, what price should or shouldn't do, all these different things. And then you see it work out and you could learn along the way. So you don't have to fall victim to these unreasonable mindsets, right? It sucks sometimes to not let a trade mature as much as it could. But when things are, you know, kind of drenched in red flags, cracking correlation like you just saw a day before CPI or any other big time news event, no news day, we're at equilibrium on the higher time frame, or, you know, really close to it. Prices consolidated even in this range, the closer range. We have seek and destroy from overnight in the previous day. It hasn't really expanded, but we do have the core elements respected. That's why I was more focused on buys, because we got the 16-hour holding. We have the area down here getting swept. We also called shorts, right? Also talked about the market maker sell model. So there's 2 ideas that could have been identified, or that were identified and talked about ahead of time. I talked about this breaker offering a run, talked about the 4 different areas in a breaker that you can take an execution on. And then I also talked about the market maker sell model, and I talked about the buy model. So think about it. Just in the last hour and 20 minutes, you know, you've gotten a lot of information. And like I said earlier, a lot of stuff is going to go over your head. You know, the conviction that I have with what I do, I've been doing this for 7 years. Okay. August 7th was 7 years. That's a long time, right? It's like someone that just starts driving, and then versus someone that is a race car driver professionally. Like, there's a totally different world, 2 different levels of thinking, different levels of understanding and skill, right? Different levels of, you know, overcoming the ups and downs, different levels of psychology, right? I can't even tell you how many hours I spent just on my mindset. how much thousands of dollars that I've spent on people that teach psychology like professionally. There's one guy that I tell you guys about all the time, and I'm going to keep shouting him out because I just appreciate him so much. Uh, his Instagram and YouTube channel is Trading Composure. I learned about him through one of my other mentors that I learned in the ICT camp, right? I have 3 mentors, 2 outside ICT who trade ICT, and both of them have been with him since baby pips. So they have long time in the industry. So they push these resources to me, and I can't tell you how important they are. Like I can't express how important it is. I can't express how important it is to be able to understand the condition that you're in and how you need to think about things. It's more important than any concept that I can give you, right? Understanding the condition, understanding your mindset, when to pull back, when to push. Okay. I mean, it's just important stuff. I could teach you about breakers and market maker models, Power 3. I can just flood you with information. I know a lot about them. Okay. I mean, I have literally been on a mission to learn everything about everything that I have now settled in on. Market maker models, Power 3, breakers. Of course, I have my personal model that I discovered called the Razor model, but I've tried to learn everything about it, and there's conviction behind that wisdom and understanding through time. And I hope that you guys see the importance of that, and you're not just looking at, oh, he's taking a trade here, he's calling a trade there, oh, he said buy or sell or up or down or whatever, because that's like the least important. What made me think price is going to do one thing or another? What are the red flags that I pointed out? Right? How am I thinking about the trade setup when I'm in the trade setup? Right? On days like this, I have rules. What happens when I miss a trade? We'll paint it out. It works perfectly. What happens in my mind? What am I thinking? Am I worried about it? Am I sitting here thinking, oh, the whole freaking opportunity is gone now? Right? Like all this stuff is priceless. And it's why mentors, good mentors who sincerely want to help people, I mean, they're just priceless. The mentors that I have, I would have paid them any price they asked me, any price, given what I know now and what I'm able to do because of them helping me in, my own work as well. I mean, if I would have been able to have a crystal ball and just look forward and be like, damn, I could find a setup every day. I don't have to worry about it. I don't worry about losing a trade. I get over it quick because I know it's coming back. I know what I'm looking at. I'm never confused. I know how to manage my mindset. I know how to manage risk. If I could have seen the future, okay, like we do in these markets, if I could have seen the future of what I know now, I mean, I don't care what it would have taken. I would have got 3 jobs and not even took a trade until I had enough to get next to these people. And I'm grateful that I got the opportunity to do it. Not many people get the opportunity though, because a lot of really good mentors are very expensive, very expensive. I spent over $12,000 just from them. And then another $6,000 with trading psychology coaches. And I lost tens of thousands of dollars trading. So I was bankrupt to try to figure this out. So much so that I had no choice. I had to succeed in this. I have to. There's no other option because nothing is going to give me what I want in life. And like the way that trading does, it just won't do it. And I already put too much work in. I've already lost too much money. I might as well just keep going. Right? That's what I thought at first. But if I could just have known where I would be at today with my understanding, I don't care what it would have taken. I did things really reckless early on, and because I was trying to do it on my own. I said, you know what? I'm just going to figure it out. I'm tough. I've been through a lot. What's the market going to do? How hard can it be? We're pushing buttons, right? And boy, did I miss what the reality is. And if I would have just submitted and been like, you know what? I don't know anything. Let me go get around people that know what they're talking about. It's hard to trust people in this industry too, which is another thing. It's part of the reason why it took me so long and I had to just struggle through it, because that's another thing. I spent thousands of dollars on people that didn't know what the hell they were talking about. It's wasted time. Like, it's ridiculous, right? But that's why I do what I do. That's why I'm here on YouTube. That's why I do offer, extra help for those that are real serious, that want the same type of experience that I got for the most reasonable barrier, right? The most reasonable, um, circumstances compared to everybody else. Because I really want to help. And there's a reason I don't shove my profits down your throat. I could show you $10,000, $5,000, $7,000 days. I've done it before, but it doesn't pull who I want to teach. It doesn't allow me to enjoy doing what I do. And I'm not going to do this if I don't enjoy it. I'll just trade and live my life. But I'm grateful that students like you guys who stick with me every week, who show up constantly, who ask questions, who engage, you guys don't need that. You looked at the chart for maybe a couple weeks, maybe a couple months, gave me time to show you that what we do here is ridiculous, okay, in a good way, right? It's crazy. And then you took initiative and you're now investing your time, which in my opinion is more important than money. That's why I trade. My time's more important. I didn't care how much money I lost, how much it took, because I know that at the end of it, I'd be able to buy my time back and the money that I lost, because that's just the nature of this. Nothing else can give you that opportunity, right? But that's why I do what I do, kind of where I got my mindset from and how I think about things. But I hope you guys take a lot of this stuff and really put it in your mind, really internalize these things, because I was so stubborn. I just didn't want to listen. I've always been that way. Obviously, I've worked on that part of me and changed it since becoming a trader. Because it's needed, right? We don't know everything. And when we're young, we think we know everything. I'm 32 now. And when I was 20, yeah, I don't recognize that person. And that's what trading will do to you, though. Unless you just want to keep failing and not succeed, then don't change anything. Be stubborn. Don't listen to anything. Don't listen to anybody. Figure it out on your own. But you're going to quickly realize that there's better ways to do things. And there's better ways to look at the world too. I didn't really have the healthiest view on the world or money or anything when I first started. Like I said, I've been through a whole lot of shit, homeless and craziness, many deaths in my family. Dad's a loser. He shouldn't even be called dad, actually. My mom's a warrior, though, that's for sure. So, yeah, we all go through our struggles and whatnot, but eventually trading is going to make you look at yourself in the mirror. And if you're undisciplined, if you don't have the right mindset, it's going to quickly show you. And although it quickly shows you, it doesn't mean you'll quickly embrace the need to change, right? Or take the steps to change. And that's detrimental to you. But that's why I teach the way I do. That's why I sit here and have these conversations, talk about my perspective on things. Because it's not only about the charts. Again, there's a lot to this. For me to come out here, well, it's not much on YouTube, obviously. I'm only here twice a week. But for me to go into my private group every single day and show up and constantly show opportunities that are available every single day, to hit at the rate that we're able to hit, there's a lot to it. You may see like the little piece of ice on the top, but the iceberg is deep. And those of you that spend a lot of time here, you start to see that over time. And doesn't mean it's rocket science. I'm not a genius, okay? I've just been fortunate enough to get in front of people, including ICT, that, I don't know, just giving me good information that does work. And I took it upon myself to obsess over it. And I had to teach it to myself in some ways because some stuff is really complicated. And you guys know firsthand, I've heard from all of you that people like to complicate this stuff. But it can be simplified a little bit. Some stuff can't be avoided, right? You have to deal with the complexities, but you know, you're either going to accept it or you're not. This is a hard industry. We are complex individuals. So from psychology to what trade to take, you know, there's going to be some complexities to it, but I hope that the way that I share things and what I teach and what I pull your attention to, and how I teach this stuff, like what I teach and how I teach it, hopefully it's very sticky, because I pulled the most sticky things that I could possibly teach that stuck to me and changed everything for me. And I put them at the forefront, like market maker models, power 3, balanced price ranges, you know, the order flow signatures in each candle, you know, all these different things. You know, it's very sticky, and others, right? So I hope you guys have been aggressively applying them. But yeah, so looking back at the chart, I see retracement. I still see bullish breaker. I see small market maker buy model. I see price getting outside of this candle here and then maybe setting up another buy position. Could honestly use that whole entire area, include the inversion. So if this thing can close above that, that'd be great. We got relative equal highs here, relative equal highs here. Looks like they're layering liquidity. So we've got a lot of layering going on. See, an issue is that this looks like a bull flag. So they may want to punish that. Well, we'll see. If this thing was to get up beyond this, I'd like to see a retracement into that. Respect that level. Let's get off these seconds charts for a minute. So yeah, we got like accumulation somewhat. If it is going to go higher, this may result in accumulation inside of this level. Accumulating what? Sell side and buy orders, right? The breaker should be a change in state of delivery. Shift in market structure. So we got breakdown, shift in market structure above that high. If we're using the 5-minute chart, those of you in my private group, see this right here? Change in state. Early second change in state, if we can get up above that. You can also see the razor model sitting in here as well, assuming that it is going to try to go up. But the fact that it's a bull flag has me a little sketched, and we're outside the macro. The macro did provide the start of the move and some moves to take part in that breaker. But we'll have to see what it's going to do a little closer to the macro. I'd be waiting. If I didn't take a trade up to this point, I would elect to wait. We talked about 2 ideas already. One, going short to target this liquidity, and then a buy with a couple of other different buys inside the breaker that may lead us to targeting the upside. Let me actually go check something real quick. Is everything set up properly? Yeah. Looks good. Interesting. does that look different? Yeah, if you guys have any questions, just let me know. I see this as accumulation, manipulation, distribution, rebalance. I would expect redelivery if we're going to get up here and it's going to be justified. Apparently we got SMT. Yeah, we got bullish SMT and bearish SMT. This looks like a market maker sell model for the Dow. Maybe an immediate rebalance here if this thing does shoot up. If we see this thing break through this, that'll have proven that this 1 hour was just simply an immediate rebalance. Just digging a little bit deeper into this little gap there. We got sell side, buy side. So this upper 25% of this high to that low, we need to see that get respected if it's going to keep going up there. The low, high, full range, midpoint, upper 25. Yeah, it looks like everything is all good on the back end. Except the title's wrong. Wait, is it right? Yeah. Yeah. Looks good to me. I don't know what's happening. Interesting. It's always some technical nonsense going on. Yeah, so now we're kind of in time distortion, it looks like. It's accumulation. But we can see the overall tendency here. We have accumulation, manipulation, distribution, rebalance. So we should get redelivery. Relative equal highs. We got a full closure of the regular trading hours gap. So now if we move down, move down to the 1 minute chart. Again, we got this market maker buy model. We have a smaller scale, accumulation, manipulation. If this distributes higher, we get rebalanced and redelivery. This is the larger one. This is the smaller one. 7 a.m. time, right? So 7 a.m. is here. Right there. So we got accumulation. It's manipulated. Haven't really got below the open price. So it's kind of reluctant to get down there. You see how it's respecting the upper 25% of that breaker? Reverse. So yeah, again, I'm all for this continuing to get up there. Like I said, that's what my main opinion is at this moment. I'd like to get us into a macro. Let me go double check the chat. It's okay. You can hold stocks and take what you can. Yeah, exactly. There's nothing wrong with that. All right. On days like this, for sure. Outside of days like this, yeah, we're gonna continue to push to get more larger moves. We call big moves. Just about grabbing most of it. Took the 3 minute inversion to the 5 minute gap midpoint. And look what DJ said. Done. Got it and got out. That's what I'd love to see. That's what profitability is like. That's what it is. You're not looking for all the move or every move. Although, you'll get better at catching all the move, or at least most of it. That's all you're aiming at is most. You just want most of it. And what is your objective on the day, on the week, on the month, on the year? What is your target? You got to have a target. You got to have a goal. If you don't have a goal or a target, you're not going to hit anything. What is it? 1% a week? There's nothing wrong with that. 4% a month? Is it 5% a week? 3%? 2%? All you need is 6% a month, and you're able to double your account. Right? Is it 6% a month? 6% a month. Is it 6% a month? 6% a week? I can't remember. 6% a month is really, really good. Think about breaking that down. Whatever your percentage is that you want to catch per month, break it down into 4 parts, right? See how much that is, and then break that down into, days. How much you want per day? How much do you have to make per day? You should be looking at weeks, right? Like if you have a monthly goal, break it down into what you need to make per week, and judge yourself based on that, because you're not going to win every trade setup every day. And you don't want to be getting thrown off every time, like, oh, well, I have 5% a day goal. Like I need to make 5 or 10% a day. And it's like, you're not going to do that. Right? You may sometimes do it, but I wouldn't bank on that. Bank on something realistic for you at the moment. Eventually 5% may be reasonable, especially if you're risking like a little bit more, like 2%. Because you're comfortable with yourself, you're comfortable with the risk, you're not worried about a loss, you have enough money to sustain that type of trading. But until then, you got to be cautious, you got to be calm. Shout out Fotis, by the way, from my private group. Beautiful, look at that. Inside the inversion fair value gap part of the breaker. Love to see it. Amazing. Look at that. Beautiful. Look at that. Look at this. Beautiful. Exactly as outlined. Like a magician. Hey, we got the crystal balls, yo. I like the crystal ball emoji. Yeah, we got so many. Look at Jen. Jen's a savage. Shout out Jen. Jen needs to start a YouTube channel, by the way. Everybody convince her, encourage her to do it. Look at how spectacular that is. Unbelievable. Beautiful. Look, bang. I mean, dude, just look at what you guys are doing. You guys are phenomenal. There's Jen again. DJ, good job. I mean, it's amazing. It just never ends. It's constant. So many now. So many good things happening. It's amazing. So I'm proud of all of you. Happy to play just a small role, helping you with clarity. I think you guys are slowly getting there. Some of you guys are quickly getting there, which is amazing to see. It's amazing what a simple change in mindset and recalibration of what's important, where your focus is at, right? It's very interesting how simple things can really change things, and simplifying what it is you're doing. Because I can make this stuff sound like rocket science. I can make it feel like you guys can never leave, like you need to be here because what I have is better than everybody else. Like I could stir that type of emotion up. That's what you can do, because trading is that way. If you're actually good at it, I mean, ICT's even said like it was hard for him at first to be responsible because he was reckless. He was a 20-year-old. You know, he had a hard life too. You know, he talks about his story and whatnot, but you know, if you're gifted this, if you end up having this skill set, you should try to do good things with it. Try to pull others up with you, pass it on to your family, your friends. You know, try to go help people. You know, pass the blessing forward because it's obviously given to you for a reason. So you want to make good decisions with it because this stuff is ridiculous. Like, can you imagine the way you would walk into work? Once you get to the point where you're like, yeah, I can find a trade setup every day. Can you imagine walking into work, making whatever they try to give you? Can you imagine the mindset? You'll probably enjoy being at work at that point because you don't need it. Maybe you're there for benefits or, you know, whatever. Maybe you have a retirement and you don't want to lose it, you know, because you already have a lot invested in it. Every day from that point on, you're going to be like, yeah, well, hey, I don't mind. Anyone that stirs up crap at your job, be like, yeah, whatever. It's not even going to bother you anymore. You know, you may eventually get to the point where you want to leave, right? But changes everything. It really does. Could, you know, give you a stimulus check. You want a raise? Your boss ain't giving you a raise? Yeah, no worries. Just go in the market and give yourself a raise. Like, it's amazing what can be done, what is done with this industry. There's many ways that you could take it. So yeah, we're clearly in time distortion, you guys. So unfortunately, you know, this is the vibe. I told you guys this is a risk of these types of trading days. You know, they're saving up, they're stacking up. You know, they're trying to build up that liquidity, make you second guess yourself, make you do something stupid, make you blow your account. That's what they're trying to do. They're holding price. It's not trending. We already got in front of the two moments where it was trending. The moment when it shorted, talked about it, and then the moment when it buyed, or buyed. But I make up a new word, buyed. I buyed it. Yeah, that makes sense. But the two main things we were able to frame. So again, if you guys have any questions, just let me know. You know, that's why I'm here. But you know, no questions is also a good thing too. It shows that I'm doing a pretty good job. Chat disconnected. YouTube, what in the hell is going on? Is it chat disconnected? Hope not. Oh no, there you go. Yeah, no, it's not. YouTube is tripping, yo. YouTube be scaring me. It'd be throwing these like red and orange alerts or sending me messages saying, oh, it's disconnected. Please wait and retry. Oh, can't connect. Like, what? It's all working. I think the AIs are dumb that track all this stuff now because AI is doing a lot of stuff now. Like banning stuff, which is kind of insane. They shouldn't be banning accounts solely with AI and then not even responding because they never respond. If you get your account screwed up or they, you know, block you or whatever on all social media, it's nearly impossible to talk to anybody unless you have like a giant following. Then you're like main priority, of course. But they got to get it together. Like, get it together. But yeah, so see what this wants to do. I still believe that we could still see price appreciate up to here. I'd prefer to see that, but if we were to break down through this or get down below this breaker that I have outlined, then we'd have to look at that as an inverted breaker, see how it treats the lower part. And if we can get price to come down into this candle in here, think that'd be nice? Because then that'll be potential second stage distribution. Oh, freaking eye. It's like off and on. It's so weird. Gets okay and then just gets hecka blurry. But yeah, so how many of you took a trade today? Can you let me know? I know DJ took a trade. I know Fotis took a trade. Did any of you guys, any others take trades? If so, which one? Which one would you have felt more comfortable with? The short? Oh, you're in a short? Oh, you're short right now? Interesting. Yeah, let's see what happens with that. Not sure what model did you use? Did you use a particular model? It's a little risky with that breaker, but you know, I like the independent thinking. It could be a slight argument with this, as long as it respects that. Maybe able to get a little bit of a move lower. But yeah, that's what this is right here. Oh, we'll see what happens. We trade silver bullet. Nice. So silver bullet, it's the first presented for value gap of 7 a.m. time. Silver bullet. Go to the fair value gap here. So that right there would be the silver bullet fair value gap. So a little bit early. That's the silver bullet fair value gap right there. So once it breaks through it, returns into it, that'd be part of that model. And that's all it is, right? It's silver bullet fair value gap. It's the first presented fair value gap of the 7 a.m. Pacific Standard Time hour. And you just catch it like that. Or you could just use that window, and like you said, just add a different PD array. But this is the core crux of the idea. Yo, what's up? Yo, what? It's been a minute, bro. God dang. Bro, where you been at? Damn it, Daniel. So from 29,840, then I took a buy after the stop loss got taken. Interesting. Okay. So yeah, this is all time distortion. So again, it's best for me personally, if I didn't take a trade, I would be waiting, watching for the 7:45 time. But I would really like to see how this is going to hold in here, because I like this breaker. It hasn't yet turned it off. So that breaker could very easily hold this and send us back higher. Now, of course, if it breaks through and we get inversion for value gaps in here, that one right there, it's pretty interesting inversion. We're kind of trapped in between two perspectives, right? The breaker and possible retracement to go lower. Because of how we came off of this low and what the higher time frame looks like, and the fact that the dollar's weak, it's got me thinking a lot further towards the buy side. We do have this bear flag. We do have like no news. So these are just some thoughts that are going through my head. And if I didn't take a trade in here, given the time distortion, I would like to see a change in state of delivery. I would like to see if we can get this thing to, well, I mean, look how it's continuing to respect this up candle here. It's a very strongly holding. So that's a high resistance level that it's trading into. And again, we have a stop run down here. So even if this does look to get down into here, that's high resistance delivery because it's a stop run. So any shorts are high resistance because of that simple fact. Right? Doesn't mean that, you know, it wouldn't work just because you're trading into a high resistance level. But I think the underlying context is a little more favorable towards the buys. But then again, both are a bit sketch because we're inside of this range. We're back to equilibrium. You see that? So you take this high up here to that low. We're dead smack in the center of that range. And what has that led to? Time distortion. So yeah. Sure, everything you do so far. Biggest month. That's awesome. Daniel, that's awesome. Bro, you're saying thank you to me. I gotta say thank you to you. You got me into trading, bro. Like you literally got me into trading. And it's changed my entire life. So thank you. I have dropped right below the first gap, and if stopped out, switch idea. Sure. Okay. Longed at 733, trying. Powell. Who's Powell? Powell? Talking about Jerome Powell? Let's see. Wick into the first gap. That's a beautiful response right there, huh? So we got accumulation, manipulation, distribution, 1, 2, 3 drives pattern, possible reversal. And it's again accumulation in this breaker right here. So I really do like that. We got our change in state of delivery here, right? Accumulation, manipulation, distribution, got a rebalance right there. Redelivery, we got inversion for value gap. So this thing should hold these levels and keep going up through these equal highs up here. Yeah, you see how the buys are less high resistance, how it's having a very easy time getting through this versus how it treated the sells given the high resistance classification. That's why counter trend trading can be slightly difficult. This is part of why I've been more so leaning heavily towards trying to see this go higher. So yeah, let's see if that thing can get acceleration here. We're in the macro too, so we should pick up if it's going to go. Let's go the 5 minute, 6 minute, 7 minute. See if we can find order block. It's one right there. So that's a larger order block. So once we get up above that, it should catapult it. It should shoot it like a slingshot. Kind of pull back, and now we're slingshotting higher. So if we get down below this fair value gap here, it'd be questionable to try to really get involved with or hold it even further. But it looks like we're still again in the market maker buy model. Everything is still holding from the breaker setup I initially called out. Nothing's changed. We just gave a little bit of a retracement. That's all. And we got these equal highs up here. That's my main objective. If we can get up there, because of CPI, I'm giving it the leeway to not want to be able to do that fully. We may stay inside this range. This red line here is equilibrium. Okay. So we've got the whole entire range right there. It's a graded price swing now, assuming it's going to operate the buy model. This here, what time frame was? I think it was like was it an 8 minute? It's 8 minute OB. No, 10, 15, 15 minute OB. Beautiful. I like that more. Do have those equal bodies in there. This large wick right here is very telling as far as this thing giving a retracement back into the range. Remember, whenever we take stops like this and it immediately comes back and closes well above what it just took, that's a sign that price is going to possibly turn. And what you have to look for is the next candle, how it treats that wick that was created. And if it respects that and you can get an inversion or an order block, change in state of delivery, or a breaker that forms somewhere in there, promoting continued buy side in this case, you could then try to get back in line with it. So yeah, this thing should start to accelerate here. So yeah, that's nice. 15-minute order block, came right back down into it. Because it's a 15-minute, look at the speed that's happening. So I kind of just mapped out how you could have participated in this as well. Oh, 155-minute? The hell is that? So you got another accumulation, manipulation, distribution, watch for rebalance, and then redelivery. Stop run, stop run, stop run. High resistance if it was to get down through that. It's a breaker. Breakers are high resistance. We got stop run here. High resistance level down here for liquidity. Low resistance liquidity up here. It's failure swings. You see how that works? So we should fly up there given the macro. And now that we're above this high, that becomes a BPR right here. Right, this whole box in here should act as a balanced price range. So because that's the case, we do not want to see this level get traded through, the 25%. Okay, so it needs to stay up in that level. Simple, right? At least I hope it's simple. Does all this stuff make sense? Let me know in the chat. Almost added there. Manuel, you're dope, bro. I appreciate you. Yeah, Daniel's awesome. Daniel lives in Egypt now, by the way. Isn't that interesting? He used to live out here. Went to the good old Holy Land. Almost added there. He's small, but apparently his model is big. Oh, interesting. Yeah, I'd be careful. I'd be careful. If you have something that works, DJ, I'd be very careful about adding things. Be very careful. And I'm not sure if he trades ICT, but if he does, again, just be careful. Too many perspectives can dilute something that's been working for you. I would never use it. Just, oh, okay. Yeah, no worries. You know me, I always got to look out for y'all. Let me see, did I miss any questions? No. Yeah, so we'll see what happens here. So we got fair value gap, we got an order block, and we got a swing low in the upper 25% of this range. If this was to break through that, there's no setup. It's invalid for this to keep going. But so far, it looks like we got rebalance to redelivery, rebalance right here to then redelivery again. Let's see what it wants to do here. Should really accelerate. See what happens. That's a rejection block there, so we got to watch that. Careful. If this thing starts to reject and breaks through, could be a problem for this to continue, and we may just be right back to equilibrium. So yeah, I'm not sure if it's going to have enough juice to get up to our main targets because, again, CPI is right ahead of us. It's right there. It's the next day. So if you were smart money, wouldn't you wait? Get people all excited thinking it's going to go one way, but stall them out. Get them to be emotional, no follow through, and then come into tomorrow, get wrecked. That's what I would do. But hey, who am I, right? Look at the 1 hour chart. It's immediate rebounds. That's what it looks like. That's a big wick. Got a rejection block. And these equal highs up here look kind of nice. Okay, we're just back into the range. Like I said, this is a nasty area to trade. It's just in a range. Yeah, you see that reluctance to get through that rejection block? It's also a bullish order block, but it's a rejection block. I don't think it's going to have enough juice to get through that. It's really respecting that level. See what happens. Well, maybe it will. Maybe it will. Looks like we're in time distortion again. Something that I don't really like. Kind of see it. I was just stuck. Took stops. Bounced from a PD array. Now we took stops up here. Coming back down. And again, that right there needs to stop price if it's going to have another leg higher. It's coming down to a 15-minute bullish order block. We did just hit that upper part of the fair value gap. But again, that wick right there, oof, it was vicious. So we'll see what it wants to do. Looks like they're coming back right now. Still potentially in the rebalance phase of the small accumulation, manipulation, distribution we outlined. Accumulation, manipulation, distribution, rebalance. Yeah, all of this down here is high resistance. It's kind of all just pretty nasty in there. Yeah, so it's 8 o'clock now, guys. So I would pay attention to this. Watch and see what transpires here. See if we can't get this thing to run up there. We may get stuck in this time distortion at equilibrium, though. So something to keep tabs on. Something to watch as the session unfolds. But I think that just about does it for our call. I think we did a lot today. Let's see. Yeah, we're definitely purists over here with ICT for sure, DJ. It's just better that way. Less confusion, less conflicting conflict in strategy. I think it's just better, with whatever you do, to be a purist, so it doesn't get diluted. You know what I mean? But yeah. So with that being said, God bless y'all. We'll be live again tomorrow and the next day as we continue this marathon that I do once a month on the second week of every month. Not sure when I'm going to stop doing it. Probably not going to do it forever, but I appreciate you guys hopping on. Appreciate you guys spending time with me. Hopefully you learned some stuff today. Let's see if we can get this thing to go up there, right? But yeah. So with that being said, God bless. Again, thank you guys for all the love and support. Hope you've learned a lot. Hope you got value from today. And don't forget to like the video and subscribe to the channel if you haven't already. Definitely does a lot for the channel. Helps me get in front of more people who may need this type of conversation, this type of guidance. Because we all know how hard the trading industry is to find good people, good mentors, people that actually can prove that they know what they're talking about, and then be able to teach you properly in a way that is digestible. And from feedback, I think we do a good job of that. So yeah, thank you in advance. Yeah, that about does it. So I guess I'll catch you guys tomorrow. Have a good rest of your day, okay? Let me know if you guys need anything. Hit me up in DMs. I'm always here to help. All right, so talk to you guys later.